Hello, and welcome to another day of TA the Degen way, and today I want to do something a little bit different. I want to be extremely deliberate and discuss the idea of how do we find key levels on a price chart using the percentage method by WD Gann. And like I said, I want to be very deliberate in the method and just give an example, and we're going to take a look at Solana and just show how it is that WD Gann would use these percentages to find key areas for resistance. And before we begin, I just want to read a short little excerpt from his book 45 Years in Wall Street, where this idea comes from. He says, "One of the greatest discoveries I ever made was how to figure the percentage of high and low prices on the average in individual stocks. The percentage of extreme high and low levels indicates future resistance levels. There is a relation between every low price and some future high price. And the percentage of the low price indicates what level to expect the next high price. At this price, you can see out long stocks and sell short with limited risk. The extreme high price or any minor tops are related to future bottoms or low levels." So what is he saying here? I mean, he's saying one of his greatest discovery was how to figure, different key areas on the chart using percentages of highs and lows. So let's look at Solana. And what do we have here? Here we have our swing high, swing low, swing high, swing low. We have all these highs and lows in between. So he's saying that you can take a percentage of this high. So what is this high? So let's just say it's, $255, $275, whatever this is. We could take a percentage of this to get the low. So what is the high? It is, let's just get right to it. So he's saying we take this extreme high price. Let's go ahead and change our chart to candles. There we go. It makes it a little easier to see. Oh, we shuffled over. And we are on the daily chart. The high price is $260, and the swing low was $5.35. So if you were to start dividing this, so if we took this in half, so let's say that we take a percentage of this high, and it was $60, or no, $260, and let's cut that in half. That would be $130. So let's come down to 130. And what do we have? Here's $130. Let's just take this $260 high and let's start breaking that number up. There's $130. I mean, support resistance flip at major key level. And then, and what about even minors? So we got $260. What would 75 or 25? Let's take away 25%. So you take $260 times 0.75 is $195. So let's go to 195. And let's snap a line. There's a few ways to use these percentages. You take a percentage of the high, you can take a percentage of the low, and then what I find to be the most valuable is percentages of the range. 50% of the range, that's your retrace. That's your fib levels that everybody loves to use. The 0.236, that's a 25% retrace. The 50% retrace, the 61.8, that's a 62.5 or a 5/8 retrace on the range. But here we're looking at just using the high value and the low value. Then let's take percentages of the highs and lows like he said. So 50% of $260 was $130. it gave us that. Well, what is 75% of 260? It's $195. It's also a key support resistance. And then let's take what would 25% of 260 be? Oh. Let's go 260 times 0.25. That would be $65. So let's come down to $65 and snap a line. You don't need to be exact, but I mean, key support resistance, key resistance, key support resistance over here. I mean, no need to even look at these support resistance levels. We're just taking percentages of the high. You know, we could keep breaking this down into eighths, you know. So I mean, that is one way. Now let's go down to our low. What was our low? Let's do the same thing. So that gave us, you know, and all I did here is we took the 75%, we took the 50%, and we took the 25%. And Gann didn't just use those percentages. If we go down in his book, 45 Years from Wall Street, he says, let's see, the most important resistance level is 50% of any high or low price. And well, what did we see at the 50%? I mean, that's a key support resistance. And then he says, second importance is 100% on the lowest selling price. You can use 200, 300, 400, and so on. So let's go to the lowest selling price. And let's start to multiply this thing. So the lowest selling price is $8. Okay, so 8 plus 8 is $16. So let's go to $16, snap a line. Let's put these ones in yellow. Now we could have done like 62.5% off the high. I mean, we could have done you know, all the way down to eighths, sixteenths. You know, what is an eighth? It's 16.5%, you know, it's 0.165. So now let's take this and let's change it, you know, so now we could have got all kinds of values off of that high. I mean, we didn't run it all the way out. I mean, I'll just do one more before we start the low. So let's take that $260 high, let's multiply that down to an eighth, so 0.165. That would be $42.90. You know, we could take this all the way down to 64ths or whatever. It's percentages of the high. So that came out to $42.90. If we consider just eighths. I like to start with quarters, you know, and then you can come down to eighths and sixteenths. And, well, regardless, we'll just say 43. Snap that line. You know, resistance. You know, we probably got another one right there. You know, so there's our key high levels. I mean, look at where price stopped. I mean, just by taking percentages of the $260 high. Now let's start expanding percentages of the lowest selling price. He said 100, 200%, 300%, and so on. So if you add 100% to $8, well, that gives you $16. So let's add another 8 on there. That brings us to $24. And rather than do this, I mean, a little trick that I have here, I'm going to just delete everything on the chart. We already talked about percentages of the high, and we got some levels, and it broke down how to get those. I mean, you could take 1/64th, you know, and put it in decimal form and see what that comes out to. You can break that down as much as you want. But now we're going to talk about taking percentages of the lows. So $8 is the low. So if we snap a line at 8, let's add 100%. That's 16, and now we're just going up by $8, by $8, by $8, and $8. 100%, 200%, 300%, and so on. I take my fib tool, and I call this the initial impulse range. This is the bottom range right here. we're going to start expanding this. So I take my fib retrace tool, and I have adjusted the values. Oh, wait a second here. So if you double click this and come into the options, you'll see templates down here. You can change these values to whatever you want. When they come at the stock, 236, 382, and so on. I have one set up in a grid of 1/8 increments. 0.125. I've been saying 1/8 wrong. 0.125, 0.25, 0.375, and so on. And now these are all equally spaced apart. So let's take this first $8 range. So here we came up. We want this first line at $16. And these will be all evenly spaced apart. So we are going, here's the $8 low, here's $16. So we're skipping something here because we should be at $24. So we'd have to break that up into 16ths. That's what that comes down to. Alright, well actually it's going to change. But still, you can use, this is percentages of the range. We'll talk about that in just a second. Let's just stick with percentages of the low value, $8. So $8, $16, $24. Yeah, because these are going to start to get closer and closer together because I'm on a log scale. So there's $24. We'll add 8 onto that, which is $32. $40. And let's go up to $48. Now when you do this, ignore the price chart and just put, obviously I'm not putting the numbers in right on the money. I'm off by some pennies, but don't look at the price chart, just put the numbers in, then look at the price chart. So we got 48 plus another 8 would be 56. And this is elementary math. Nothing advanced in here. We're just taking percentages. We took percentages of the high, $260. Now we're taking percentages of the low, but we're multiplying it. We're expanding it out. 100%, 200. We're just adding 8 on top and on top and on top. So now we're at 56. So let's go up to 64, 72, and I'm not going to bother trying to get right on the money here. Just boogie through this because we got to talk about percentages of ranges, and I do not want this video to be some hour-long video talking about price predictions. The point is to be educational and learn how to find these key levels. So now we got 88. And the farther you come up, you really almost need to start skipping more and more and more because you are up so far. That just adding $8 as we go up, you can see these levels are getting on a log scale, are going to get closer and closer together. Now on a dollar chart, if we just change this off a log, they're all equally spaced, which is why I tried to pull that tool right off the beginning. But I prefer to use the log chart. I don't care about the change in dollars because, as you can see, a change in $8 when the price is $200 is not the same as a change of $8 when the price is $10. Big difference, major difference. I care about the change in percentage of value. But you can see as this goes up, this is just fading out until eventually that they will probably be right on top of each other, and you'll probably have a major high. But you can see how taking percentages of this low is giving you key price levels. Now let's go back and let's check these levels and see what happened on our push up. So you can see right off the bottom we added $8, $16, ended up being support right there. It ended up being key support right there. It ended up being key support resistance flip right there. Then let's come up to $24. That's, you know, pretty darn close to your resistance there. Let's go to 32 resistance. I mean, this is from a book wrote in 1949. Man, I mean, it's been around a while. It has nothing to do with exchange indicators and anything else. What are we doing? We're taking what he said, and we're taking percentages of the highest value and for retrace levels, and then we're taking percentages of the lows. How did Gann come up with these levels? And he used a conglomerate of things where he was, using this method, and I'm going to show you the percentage of a range method next. We took percentages of the high price, percentages of the low price, and my guess is being that these are all in sync and decent and orderly, we could probably take each one of these lows and start 100%, 200%, 300%. You could probably 150% also, maybe 125%. I don't really feel like going through all those ratios, but you'll probably find all these little turns, because these markets, they are decent, they are orderly. There is a fractal nature to them that you can see by looking at the past. So while you cannot predict the future price, that is ridiculous. What you can do is you can predict key areas in time and price, and we're going to save time cycles for another tutorial video like this one. Here we're talking about key price levels. And so far we have found key price levels by taking percentages of the high. We have found key price levels by taking percentages of the lowest price. And we could keep adding this on. And just for argument's sake, we're going to hit the delete button, and let's take this lowest selling price right here. The low is $17, And now the math is getting a little advanced. 17 plus 17. I mean, pretty sure it's 38. Better be. 34. Not good. So if we start at $17, we'll just do one or two of these. Let's go to 34. Oh. My goodness. I mean, boom. Let's add 17 on top of 34. That brings us to $41.51. Oh, my goodness. What was WD Gann's greatest discovery out of his own mouth? When he discovered that future highs and future lows were percentages of the highest and lowest selling price. Now, this does not tell you where price will go, but it tells you where you should be looking for a reaction, where you are trading what presents itself at those levels. If we add another $17 on here, that would be $68. Let's go to $68. Well, my soul, and so on and so forth. What key levels should we expect past here if she keeps going up? Well, take this low right here. It is $82. Well, 82 plus 82 is going to be $164. So what should our next price target be? $164. And lo and behold, it's probably a doubling of the range, because these things are fractal in nature. It's just is. And let's say that we reverse here and we start coming down. What does that make this? It makes it a high. Take a look at it once, and let's say this is the high price of $126.15. Well, let's start with 75%. So what did I say that was? That was 126.15. I'm going to take my calculator. 126.15 times 0.75. That's $94.61. Let's go snap a line at $94.61. Well, there's 94 something. Alright, let's get it. 94.61. There's 94.50. Close enough. I mean, support resistance. You just can't make it up, you know. It can't make it up. Now you could, you know, take other percentages. You could take this, you know, down to eighths. Start, you know, removing it 1/8 in percentage, you know. So if you just took your calculator and just said, okay, well, what is 1/8 in decimal form? It's, you know, 0.125 or 12.5%. So let's take our high here, and you can use this in your day trading. Take the high of the range, take the low of the range, and find percentages of it. If you look at my charts, and if you've been following me for a while, you'll see oftentimes I square the range. Here we're squaring the high price, and we're squaring the low price. These things work. And we're going to talk about this next, where we square the range. You know, we could double this range. And this is your retraces. We could retrace 50%, 25%. But let's just talk about 1/8. So let's stick to this high price if we're trading this range. And what are we talking about? How did WD Gann find key levels of interest to trade? He's not predicting the price. He's predicting the, you know, areas to expect a reaction, and then he's using basic trading strategy to look for a reaction there. And over years he just, you know, learned how to trade, but he's using these key price levels. His greatest discovery was when he discovered that future highs and future lows are related to percentages of the highest selling price and the lowest selling price. So here's the highest price, 126.15. So let's just take 126.15. We're going to multiply that times 12.5%, 0.125. That's $15.77. So let's remove that from our high. You know, I mean, an easier way would just be to, you know, take it times whatever it is, 100 minus 12.5. So it'd be 90, 88, 87.5. But here we already got it. So let's take our high price and let's subtract that off. I mean, because what do we want to know? What is 1/8 of this price? If we split it up, well, it's $15.76. So every $15.76 down, we should be expecting some kind of a reaction. So let's come down $15.76. I'm going to take the tape measure. We're going to come down $15.76. Let's see, right? Oh, come on. There we go. And now we're going to come down to a much smaller time frame so we can see what's going on there, because we can't see that on the daily. Oh, now we can't see our high. Let's go to the hourly. There we go. So here's our high of 126.15. And we're going to come down $15.76. So there's $10. Let's come down $15.76. See this low right there? Reaction. Now if we took another $15.76, what I'm going to do for the sake of time, we're just going to grab this and double it. This also became our support resistance flip right here. I see that 15.76. So now let's come down another 15.76. Oh, it's the low. I mean, you just can't make it up. Dude with a hand-drawn calculator. No computers, no modern calculators. Just using pieces of paper. Figured these things out. and they work. So that is how you find key price levels using the percentage method developed by WD Gann. You take percentages of the highest price and percentages of the lowest price, and then you take, which we're going to do next, percentages of the range. And we talked about it on the macro scale, and here we're talking about it on a day trading scale, just trading this range. Where do I get these numbers that, like, oh, the price magically reversed? I didn't know the price was going to reverse there. I can't predict that, but what I can predict is I can predict reoccurring ratios that, you are likely to see a reaction. And when you have a whole bunch of confluence on one area using multiple methods, we have square the high, square the low, and then square the range, which we're going to talk about next after the low. When you find a bunch of values that just land on top of each other, plus Gann used a percentage-based method of time cycles on the trend, which we're going to talk about in a different video. It's slightly more complex, but it's not that bad, so what's the low? $79. So let's take 25% of that. So let's go 79 times 0.25. That is $19.75. Well, let's add that on to $79. That gives us $98.75. Let's come up to $98.75. Now, I could have done 1/8. I could have done 16ths. I chose 25% because, usually the quarters is where you see the most significance. But all these are different. You could do 1/3. And what you should do is you should be taking an asset's highs and taking its lows and running these percentages out and see what is this chart responding to. What are the traders who are using this? If they're trading on a 1-to-1 basis, a 1-to-2 basis, or investors or market makers, how far are they letting this thing go? A third, 25%, 200%, 300%? What reoccurring ratios are actually reoccurring? So we came up with 98.75. Let's snap a line. And this is using the percentage-based method for day trading. It's just as real as the day is long. No indicators necessary. This is the mastery of price action by finding these key levels and then looking for a reaction. So if we were trading this and we marked these levels out on our chart as price came up to it, and you could use your candlestick patterns, you could use your indicators, your oscillators, whatnot, and look for and then some type of bearish reaction or reversal. But price doesn't have to reverse, it can just pause. So this is how Gann used his greatest discovery of finding percentage or future highs and lows by taking percentages of the highest price and the lowest price. We can come up with future prices out here, but that is your homework exercise, is to do that on your own and then mark them out and look at what happens when price gets there. And now we have to talk about one more thing, and that is squaring the range. So he squared the high, or took percentages of the high, percentages of the low. Then there is the most common thing that people use today, but Gann probably is not getting credit for this, which is retraces. So here's your range. We're on a 1-hour chart. We could do this on a yearly chart, a 5-minute chart, whatever. Here's the swing high, here's the swing low, this is the range. There's always little ranges in here, Here's a range, here's a range, but here's the bigger range right here. So we could we're going to go back to the daily, because this is what you use for forecasting. And forecasting's not worth a penny. It's just not. Forecasting is something that you use to give you an idea as to where you should be looking for reversals. What was the most important percentage base value that Gann used? He said it was 50%. So let's take this swing low. Here, let's turn down our YouTube jazz here for just 1 second. A little overly loud. There we go. Okay, so let's look here to here. So your price just ran up. Where should we have expected this low? So now I'm going to click on my retrace tool. He said 50%. So I've got to split into eighths. You can use your stock, 50%, 61.8, whatnot. It, I mean, where did price retrace to? I mean, I just couldn't make it up if I tried. Here's the bottom, there to top. This is the range. 50% of the range. What happened at 25% of the range? Support resistance flip. What happened at 5/8 of the range? It was support all the way across here. What do you stopped at right now? 7/8 of the range. You can take this range and take percentages of the range to come up with key price levels. So, when price is coming down, where should we be looking for reactions on our way down? We should have been looking for a reaction, here, we've matched this up with the low over here. We've matched it up with the high. We're looking for this trend. How many percent of it has retraced? So let's split this up into, 12.5% increments, or 25%, or whatever. I like to split it up into eighths, 12.5%. Did we get a reaction here? No, we boogered right on through. Did we get a reaction here? We did. We got to push up, but 50%. Somewhere between 50% and 62.5, which is, right at your golden ratio, 61.8. The golden pocket trading, everybody uses the fib retrace now. That is what, or the 786, that's 75% of the range. Price will bust past 75% of the range, say no way, wick back below, retest 75%, come back down to 50% or 25%, or maybe to a 16th in between, like right here. Look at this chart. And this chart is decent and orderly, and as such makes it mildly predictable. Let's take, now this is over. This is obviously a low at $8. So this low and this high, let's just assume it's obsolete. What are we doing? We took percentages of the high price, $260. Start breaking that down, finding levels. We took percentages of the low price, started expanding it by 100%, 150%, and we come up with levels. Now we're talking about the range. Okay, right here, we're talking about the range, and we're taking percentages of the range. And we're looking for these different percentage-based values to converge in places for super key areas of support and resistance where you could possibly see a reversal. And if you add in the percentage-based time cycles from these trends, you find all of them kind of come together in key areas, and you find key price areas to look for, a pause or a reversal. And just because you meet a key area doesn't mean price is going to just reverse, but it likely will pause or have some kind of reaction, that is at least tradable on a daily level. And when should I be getting out of my macro positions? You should be getting out of your macro positions at key levels that align with key time cycle and confirmed by bearish price action. The forecast don't mean jack. And you can combine other things like the strategies that have made exchanges rich, like head and shoulders and cup and handles and rising wedges and whatever baloney business that stuff is. It probably works sometimes, but you use these percentages. So now let's take percentages of the range. Let's say that we took all those percentages just in 25%. We took all these just in 100% and marked all those levels. And then now we take our range. Let's go for our modern run. Swing high to swing low. Right there. Okay? What do we got? Support resistance flip. Support. resistance, support, resistance, resistance, support right there, resistance. You know, I mean, just right there. It's just right there. So these are percentages of the range. So do any of these numbers match up with these numbers over here? Probably do. Well, we know they do because we looked at a lot of them. They came out at a lot of these important support resistances. And then he also looked at monthly high and monthly low, weekly high, weekly, these pivot lows, pivot highs and lows. That's easy for us with modern charting. We don't have to hand draw these out. We can just look. So where should you be looking for, key reversals or major pullbacks or price to turn sideways in range like this right here? Take a big pause. This is a directional move. This is a sideways move. This is directional. This is non-directional. It's sideways. Directional. Potentially going into a sideways move. Maybe we get a directional move to the downside. This is a directional move to the downside. You could look at this whole big thing here and say it's non-directional as in sideways. Depends on what kind of time frame you're looking at. But these are basic market principles. You could take how I'm doing this range. We could do that to just this range right here. We could go to a 1 minute chart and find a little teeny tiny little micro little range and do the same thing. Do this. We're looking at a daily chart here. So these are percentages of the range, and you want to find spots where they match. And there's one more thing that if you have stuck along to the end of this video, you have really got it for sure, that you can do to give you key price levels, and that is expanding these ranges. And I find this to be one of the most valuable things ever. So let's ignore swing high to swing low. Look down here. What is the initial range down here? Well, here's the bottom. Here's the top. So let's take this. We can take this tool. I like to use just rectangular boxes. But we can just take this tool. Oh, here, it's going to be easier just to use boxes. So let's grab the rectangle tool and let's say, okay, look at this range right here. Let's copy it and paste it. And let's start taking percentages of the range like we did the lowest price. Let's take the lowest range. Copy and paste. And you will find that price is oscillating in percentages of this range. 50%, 25%, 75%. If you're a member of my free Discord that I post in like 9,000 times a day unless nobody else does, and I might go silent looking for something from somebody else. I'm curious what everybody else thinks. I want to know what you're looking at. So let's take this. Here's this range. Just keep stacking her on top of each other. And that's why you can use your fib tool when you got it set at eighths. Those are equal spaces. And this works on a log scale. We're talking about percentages of value here. We're not talking about change in dollar. Change in dollar results in change in percentage, but as the price goes up, as you've seen when we started magnifying $8, eventually those lines get closer and closer and closer together. If we started going up by 10%, well then they wouldn't. So here, here's this initial range. We could split this into, into 64ths if you want to, and, into 128ths. Whatever you want. You could split it up into, there's 50%. Let's split it into 25%. You can be more precise with this. That's why you got this tool over here called the Gann box. Hello. I've deleted the price levels on it. That's not the stock there. Let's take that and let's go to apply defaults. There we go. I can't stand backgrounds in multiple colors. Let's get rid of the background and let's go use one color. Let's use white. And we still have the background. There we go. I like to use solid colors. I do have some form of neurodegenerative disease and my vision is terrible. So flat matte colors are extremely helpful. So we can take these, well, there's no way to base this on a log scale. Which is why I only use it for the price. Yeah, we're going to skip that. You just use your tape measure. You know, there's 50%, 25%, 75%. Get a calculator. Call up Caroline. She'll teach you how to do some basic mathematics. Look, I just split this range into quarters. Support resistance. Support resistance. Down here. Same thing. Let's take the next one. Let's take this one. Split her in half at 50. Here, let's make it easy. Let's do this. And hold down Control and click all these so we can select them all at the same time. Control C and we'll paste them. There we go. Just eyeballing these out. Should be about 50% of the range. Let's see. Yep, that's going right to the middle. Okay, look at support, resistance, support, resistance. This is WD Gann's greatest discovery. Take percentages of the highest price. Take percentages of the lowest price. Take percentages of the range. Start taking the lowest range and expanding it by 100%. That's doubling, tripling, quadrupling. And you can break this down as we move up, and you're going to get your key levels in here. And just to drive her home, and we're ending this video, and if you want to learn time cycles, again, I have one more method that I'm just not even going to bother with here. We'll do a special video on it some other time in this. Using the squares of numbers. What was Gann's calculator? He used, the square of 144 and the relationship of your highs and lows. Or the square of 9. That's a hand-drawn calculator. It's not hard to use, and there's plenty of things on the internet. But when you find all these things, all these stars align, that is how he was able to make these forecasts, where really he's just making a highly educated guess, based off of years of experience, what's going on in the world and time and events. But he's got the percentages of these highs, the percentages of these lows, he's got the percentages of the range, he's expanding the low range and moving his way up, So let's look at this right here. And just to drive the range idea or the range expansion home, if we just take Bitcoin, where do these price levels that I keep saying in my Discord that I'm going to short Bitcoin at this price. I shorted Bitcoin there, I shorted Bitcoin there, I shorted Bitcoin up in here somewhere, I shorted Bitcoin there, I shorted Bitcoin there, and I shorted Bitcoin here too, by the way, but it didn't work that time. I shorted Bitcoin right here, didn't work that time. Shorted Bitcoin over here, and it didn't work that time, and it didn't work that time. But I got 2-3 shorts here, 2-3 shorts in there, 2-3 shorts in there. Only got one in over here, and I got a couple in right here. Because one of these times it's going to be a macro reversal. When all the stars align, it probably will. Well, let's look at this range. Let's measure it. This initial little bottom, little mini, little range. What size is it? It is 18%. Let's go up just a little bit more. Let's take this whole range. There we go. It should be 25%. Is the reoccurring range on these charts. Well, that's 30-some%. But if we come over here and we just take 25%, or 25%, let's just look at the chart. Let's just match one of these boxes up. Same size, same size, same size, same size. Oh, it sounds like I got a crabby child. Don't be surprised if you hear a little noise. If you want the goods, I have 9 children. Deal with it. So I mean, you can see this range reoccurring over and over and over and over again, 25% over and over again. So if we take this and we start stacking this up, I mean, I bet if we come up here, it's probably 50%. It's probably a double of that range. 60%. But still, you could take that 25% range and start stacking. We could take this range right here, this 60%. And we could start stacking that on top and do the same thing on Bitcoin. You know, oh, my soul. You know, well, why? Because these future highs and future lows are percentages of past highs and past lows, and percentages of past ranges. You know, boom, 50% of this range, price tends to break it. So it came up halfway into the range, came back to a quarter, came up to the top of the range, pulled back to the middle, went halfway into the range above, retested the bottom. Well, kind of did it twice. We broke through this range, and where did we go? Halfway into the range above. Where did we come back to? The bottom of the range. Where are we headed now? Up. You know, we're approaching that 50% of the range mark. Well, what would you look at next? 75%, 100%. So, if you like this kind of analysis, if you learned something, press the subscribe button. We don't charge a penny, don't ask for anything. Maybe leave a comment. If you're a new subscriber, put down that you've commented, or put down in the comment section that you've subscribed, so we can get some engagement for the YouTube algorithm. Plenty to go around. You know, these are basic trading principles that I don't think are taught very well in the internet. It's all strategies and indicators, and if you haven't noticed, I just showed you all kinds of key price areas without turning on one single indicator. I mean, if we turned on an indicator, I really only use this multi-indicators, you know, the market cipher knockoff. If you got the money, just pay the man, join his Discord, you know. I mean, I don't really need the Discord, and I got my own stuff, but that's what you're paying for. You should have some type of group that keeps you from, you know, making super foolish decisions when you can kind of run it across people with some experience, or you can join our free Discord group. There's a link in the description. But if you like this stuff, hey, like, share, subscribe. Link in the description to the free Discord. I do this kind of AMA, you know, regularly if there's somebody around. When there's nobody around, I just ignore the thing. But, hey, check back. We'll do time cycles some other time. But if you like the content, like, share, subscribe. Until next time, trade well.